In this video, I'm going to share how the Tax Cuts and Jobs Act of 2017 harms plaintiffs receiving taxable settlements. Hi, my name is Maxwell with Amicus Settlement Planners. I'm an attorney and a certified financial planner who helps plaintiff attorneys and plaintiffs reduce their taxes and maximize their legal recoveries. So to understand how the Tax Cuts and Jobs Act made things much worse for plaintiffs, we first need to discuss the deductibility of attorney's fees in taxable cases. So when I say taxable cases, that's basically any legal recovery by an individual where the case is not based on a personal physical injury. So plaintiffs have always been taxed on the full gross recovery in taxable damages cases, including on the attorney's fee portion of the recovery. And this is key to understanding the Plaintiff Double Tax Trap. So before the Tax Cuts and Jobs Act of 2017, plaintiffs could list the attorney's fees as a deduction on their tax return and avoid paying tax on the attorney fee portion. However, after the Tax Cuts and Jobs Act, now, individual plaintiffs cannot claim a deduction for attorney's fees except in limited circumstances. So this means that plaintiffs pay taxes on 100% of the gross recovery, including 100% of their attorney's fees. So to reiterate, in taxable damages cases, plaintiffs pay taxes on the entire gross recovery. So let's just walk through an example. Assume that there is a $10 gross settlement. $4 goes to attorney's fees and $6 goes to the plaintiff. After the Tax Cuts and Jobs Act, the plaintiff pays tax on the entire $10, even though the plaintiff only receives $6. In addition, the attorney also pays taxes on the $4 of attorney's fees that they receive. So the attorney's fee portion then is effectively taxed twice. The plaintiff pays taxes on the attorney's fees, and the attorney pays taxes on their attorney's fees. So this double taxation of attorney's fees is what we call the Plaintiff Double Tax Trap. The Plaintiff Double Tax Trap means the plaintiff shows income of 10, but only receives 6, and has to pay tax on the full 10. So what does this mean for the after-tax net recovery for the plaintiff? Well, let's look at another example to illustrate the impact of the double tax. Let's assume there's a $10 million recovery, a 40% contingent legal fee, and that the plaintiff's tax rate is 40%. That means 40% of the $10 million will go to legal fees. Another 40% of the $10 million will be paid by the plaintiff in taxes. Again, the plaintiff has to pay taxes on the full $10 million gross recovery at a 40% tax rate. So this means there's only $2 million or 20% left for the plaintiff as their net recovery. In other words, after taxes, the client nets only 20% of the gross settlement. So let's change the numbers slightly. If the plaintiff had a combined federal, state, and local tax rate of 50%, what would happen? We have the same $10 million gross recovery, with 40% or $4 million going to the attorney. At a 50% plaintiff tax rate, the plaintiff would pay $5 million in taxes, which is 50% of the $10 million, leaving only $1 million of the $10 million settlement, or 10%, as the after-tax net recovery for the plaintiff. The bad news is that the Tax Cuts and Jobs Act created grossly unfair outcomes for plaintiffs. We often see plaintiffs who, after paying taxes, only get to keep 5 to 20% of the total settlement in their pockets. But here's the good news. There are tax planning strategies that we can use to significantly reduce the amount of tax the plaintiff has to pay, and that allow us to make it so that the plaintiff only pays tax on the amount they receive, and not on the attorney's fee portion. So with these strategies, we're often able to double or even triple the amount of money that the plaintiff ends up after taxes. So it's important to note that these strategies only work if they are set up before the case settles. So don't wait to reach out if you're involved in a taxable damages case. So if you're a plaintiff attorney, or if you are the plaintiff and an upcoming legal settlement will be taxable, please reach out to me and we can explore how these strategies can be used to increase the after-tax net recovery dramatically.